Hello, good evening, and Merry Christmas to all the viewers. It gives me immense pleasure to welcome you to this interview series of Mentor My Board, that is Boardroom Talks. Boardroom is a place where fortunes of great companies are written, and in the pursuit of bringing the best practices followed by the boardrooms, the eminent directors, and the professionals, we have been conducting this interview series with directors, professionals, business leaders who have been guiding and acting as the torch bearers for the corporates. Let me introduce Mentor My Board to you first. Mentor My Board is up and running platform which is fully functional now, where corporate directors come together to learn, to network, to sharpen their boardroom skills. And Mentor My Board is on a mission to create a community of 1 lakh directors by 2027. On 8th and 9th January 2021, we have a unique Boardroom Mastery Certification program exclusively designed for independent directors, where eminent mentors are going to mentor you to be board ready and board informed. And most importantly, important aspects like disclosure requirements under insider trading regulations, listing regulations, and creating safety nets for you as independent directors will be covered. So register on the link shared in the chat box and keep watching the space of Mentor My Board on the social media. Thank you for viewing and liking and sharing the Boardroom Talk series, sharing your valuable suggestions, feedbacks to us. And do keep like, share, watch, subscribe to our Facebook, LinkedIn pages, Mentor My Board, our YouTube channel, Mentor My Board, and most importantly, join the community of Circle of Directors on the platform of Mentor My Board. So today I, CS Divya Mumaya, founder of Mentor My Board, invite our esteemed moderator, CS Bharti Iyer, who has rich 30 years of insurance industry experience and an eminent advisor to Mentor My Board. Today, let's get ready for a boardroom talk with Mr. Parijat Dutta, and I request Bharti to introduce Parijat to all of us. So, over to you, Bharti.
Thank you. Good evening and Merry Christmas to all the viewers as well. It's a wonderful coincidence that we managed to have this time on Christmas, Divya. Really
Yes.
wonderful surprise, actually. I want to welcome Parijat Dutta, my colleague from National Insurance. Wonderful opportunity to have you here. Good evening, Parijat. Welcome to Mentor My Board Boardroom Talk series.
Thank you.
Yeah. So I would like to just read out the list of accomplishments of Parijat Datta, who retired as general manager of GIC Ray, which is the national reinsurance company, the only reinsurer. Parijat served in the Indian general insurance industry for close to 36 years at National Insurance, my alma mater, New India Assurance, and General Insurance Corporation Reinsurance Company. He was appointed to GIC Ray in 1980 as a direct recruit officer, headed functions such as property and engineering, aviation and satellite insurance, liability and risk management, and eventually with a specialization in reinsurance, both as a buyer at National Insurance and New India Assurance, and as a provider at GIC Ray. He has equipped himself with the entire gamut of activities of reinsurance. He retired in March 2016 from GIC Ray as an experienced general manager with a demonstrated history of working in the insurance industry. He has experienced both on the direct as well as the reinsurance aspects of insurance, which is quite a rare combination for people in the know. Parijat has headed the reinsurance departments of two direct insurance companies, National Insurance, which is the oldest insurer in India, not barring any life insurance company as well, and New India Assurance. Parijat has also headed reinsurance as a general manager at reinsurance company GICA. He's widely traveled and has presented a number of papers on insurance and reinsurance at various forums in India and overseas. Whilst at GIC, he served as nominee director on the board of Agriculture Insurance Company Limited from 2014 to 2016. For people who are, watching the farmer agitation and want to know about crop insurance, Prime Minister's Fasal Bima Yojana, now please note that agriculture insurance is one of the chief, or I would say to a large extent, the main insurer for Fasal in the country. Parijat also served as the technical board member of the FAIR Non-Life Reinsurance Pool Turkey. He was a founder manager of the FAIR National Catastrophe Pool in India. He's the manager for Indian market terrorism risk insurance pool in India. Post retirement, he has also served as independent director on the board of United India Insurance Company Limited from 2017 to 2020. Currently, Parijat is engaged as an independent consultant and trainer in reinsurance. He is a visiting faculty at the Insurance Institute of India, Mumbai, and National Insurance Academy, Pune. Senior council member with the Gerson Lehrman GLG, Coleman Research Group, Coleman, providing phone consultancy services on reinsurance to their Indian clients. He is also a member of the Institute of Directors and registered in the Independent Directors Bank Data Bank with the Ministry of Corporate Affairs, Government of India. The USP, Parijat, very good. Strong communication skills, passion for perfection, ability to see the funny side of life. Great. We all need that sense of humor. So welcome Parijat once again. So to kickstart this, number of directors, we had uh, some paper which Divya had introduced to all of us. A number of directors, because of the so much of scandals which are going on in corporate governance, find that to save their skins, they are. It is being shown as if they are resigning from boards, independent directors. It is being shown, But when we went deeper into the study, what Divya found was that article and the statistics which were being quoted there have not changed from the first time that article appeared in 2016, and 5 years down the line in 2020, the same statistic, the same article, and it was being shown like that there is a fear psychosis amongst independent directors who find that it is easier to quit the board rather than do your business as a director with good corporate governance and a good transfer of the risks via insurance or any other risk managed techniques. We'll start off with this with your views on this subject.
Um, Thank you, Vidya, and thank you, uh, MMB, for inviting me to this session. And um, it is indeed a pleasure for me. First of all, let me wish all of you a Merry Christmas, both Divya as well as Bharti. And let's hope that Christmas brings good tidings for all of us in the immediately coming year.
Very much, very much.
Yeah. So coming to your question, Bharti, the thing is, although the statistics may appear to you to be repetitive, the fact remains that the risk that a director, an independent director, faces today has undergone drastic changes over the past 2-3 years, and ever since, for example, the companies law Companies Act got amended in 2013. And after that, there have been several amendments that followed. So the responsibility, along with the responsibility, the accountability of directors has risen manifold. And when you come to statistics, you will find that in the last 1 year itself, about 500 plus independent directors have quit. Now, the reasons are more than one. The main reason is the rising accountability and the fact that independent directors' personal assets are at risk. Today, if a director is sued and the company is not able to protect him, his personal assets are at stake. And directors are getting sued for very, very frivolous things also. When we look at the Indian scenario, the Indian industry, the Indian market, once upon a time, there was a belief that the Indian market was sort of non-litigant, and hence there was nothing to really worry about directors of companies getting sued as often as they're getting in the United States, for example. But today most companies, even the not so large ones, have interest abroad. They have interest in other parts of the world. So anything happening in any other part of the world would have a direct bearing on the entity here in India. Hence, the directors who are on the board of the Indian company do have something to really be concerned about, because number one, the awareness of litigation is increasing in our country, as well as the availability of lawyers who are willing to help you to sue a company. And there are so many channels in which a company can get sued. The shareholders can sue,
Yeah.
the regulator can sue. So it's all very, the picture has become very big, and as a result, the risk.
Sorry to interrupt you, Parijat, because this is a wonderful subject for the both of us. Both of us being from insurance, risk
Yes.
management backgrounds. But here I would want to submit that the first line of defense is do your business well, have corporate governance properly in place, and ensure compliance is being done of all the applicable laws. And to a large extent, the director is safeguarded. And we wouldn't want our directors who are listening in to be scared enough to resign. So, what we were feeling in that article is the picture which is being painted was a bit bleak. That 500 directors and the statistics had not changed much in the article. So we felt that possibly a better way of putting it is to transfer some amount of the risk, which we are going to discuss further. But before going into that question, now that we have got all the interest of the viewers, let me just ask you about your quick this thing on the skill sets, what you feel is necessary, and what were the special skill sets which got you invited to the board of United India as an independent director.
Well, coming to how I got invited, I had just retired in 2016, and I received a phone call from the ministry saying that they had made a list of some retired CMDs and general managers, and that I was one of those. My name was in the list also, and they were looking at my, whether I'd be interested in joining one of the public sector companies as an independent director. So it actually came out of the blue for me. So I asked them, do I have time to think? They say, yeah, you got 24 hours. So so I thought for 24 hours. And, in the meanwhile, after retirement, I had already gotten into a project of my own, and which involved extensive traveling and all that. And that project very quickly was, I had begun writing my autobiography, and which I had thought I would, I would travel extensively, meet all my people who had made an impact in my life over the past 60 years, and write my autobiography. So my plan was pretty much set. So, but then I thought that this is a great opportunity, and it's something to be very proud about also. And the why did they choose me? I can only conjecture that the ministry does maintain a record of all senior management in the government companies. They are aware of who has worked where, and what skills and what experience has been gathered along the line. And as far as I'm concerned, and as you also pointed out, I have had experience in all the practically all the technical departments. And I have also had pretty much good exposure in HR, corporate planning, as well as risk management. And I've been fortunate in the last 13 years of my service to have been continuously associated with reinsurance. I've headed reinsurance at National, New India, GIC, as you said, both as a buyer as well as a provider of reinsurance. So that being the case, I guess all that would have been taken into account when my name was considered. That apart, and this is for an insurance company. When you talk about skill sets required, shall I go into that now?
Yes, for all independent directors,
Yes.
To be well placed, whether it's in insurance or non-insurance companies.
Yes.
What would be, in your opinion, important for them to concentrate on?
Correct.
And what Mentor My Board can also coach them on?
Right.
That would be useful.
Right. So as I was watching some of your programs ever since I got associated with you guys, somebody said that it's very essential for an independent director to unmute. Very often when a program begins, you have to really keep on saying unmute, unmute. So taking that as a cue, hitherto the situation was, I've attended board meetings even other than as an independent director, and I've found many independent directors remain very quiet during the entire meeting, and they do not have any observations to make. That is something that the reasons could be two. Probably they don't want to get really involved into any kind of debate, or probably they actually have nothing much to say. So what I would say is that an independent director who has been selected to be a member of a board.
Yes.
It's an extremely prestigious assignment. And
Yes.
he obviously comes from a section of society or from or from an educational background which is much respected. So he would be a person of intellectual standing, and there is a lot expected from him by the board to share his experiences and knowledge and guide the company
Company.
towards better performance.
Well put.
So, yeah, so domain knowledge. Now, as far as I'm concerned, in United India, I was an independent director with domain knowledge. I knew a fair amount about insurance and how it works, and I also knew about reinsurance. So I found that to be a great advantage. That is, of course, the insurance company. A non-insurance company also, it is very important that the independent director applies his mind and tries to understand how the company works, not only as a company, but also within the ecosystem in
Industry.
which it functions. You know, the
Right.
entire market, the entire country, the entire world, how does it all interact together to make that company grow? So one must get involved with the company and be able to ask the right questions and point out red flags.
Well said. Well said. Totally agree. Coming back to the direction of where I want to take you, because you know that IRDA is a very uh, participative regulator. There's plenty from IRDA in all contributions, whether it's an insurance company or any other intermediary. In your opinion, uh, risk management committee has not yet been made a mandatory committee on the boards where the other regulators, like for example SEBI or RBI, is there. The risk management committee is not considered a mandatory committee, whereas IRDA has made it a mandatory committee. Your idea about that, where you have interacted with boards of other companies?
Well, kudos to the IRDA for having made it a mandatory committee, because if you look at the history of litigation that has happened worldwide, plenty of the litigation that have happened worldwide are due to risk management failure.
Yeah.
The boards of the companies have not been able to look beyond the short term, and they are only concentrating on the short term. They're not taking into cognizance the dark clouds that are collecting above. So they have no knowledge about those dark clouds, and no remedial action is taken. If
Yeah.
you look at cyber attacks, for example, boards are being now sued for lack of foresight or vision enough to know what adequate protection the company should have taken.
Taken.
As a
True.
result of which, we are seeing instances where boards are ending up facing class action suits, derivative suits, and where the shareholders are actually suing the company on suing individual directors on behalf of the company. So all that kind of thing is happening, and most of it due to risk management failure. If you look at Deutsche Bank, if you look at Satyam also, for that matter, the auditors, they had no idea what was happening, and
Right.
suddenly you're caught off guard. And then when you're caught off guard and the share prices start falling drastically, then
Correct.
is when litigators find this as a great opportunity, that okay, you have a DNO policy, now let's file a case against you and we'll extract money from the DNO policy.
Correct. So it's your experience that most directors are not even aware that risk management systems, programs, policies are I'm talking about non-insurance companies.
I will not say not aware. I'm saying that risk management as a subject has probably not been given adequate importance in respective boards, and probably there is not enough interaction with the risk management committee.
Right.
The boards, in my opinion, should have regular interaction with the risk management committee to discuss about emerging risks. To give an example, I always am very proud of the way ITC
Yeah.
50 years ago decided that tobacco or cigarettes is not going to sustain them in the long run.
Correct.
That is when they decided that we need to diversify. And
Correct.
today,
Each your pal.
yeah, and so many other things, hospitality and all of that. So today their cigarettes contributes only about 47% of their total revenue.
Right.
Despite that, Despite that, ITC controls about 88% of the cigarette market in India, which means what? That the other cigarette companies like Godfrey Phillips and Wazir Sultan and all that have probably become non-entities. They did
Correct.
not see those dark clouds that were forming, and they did not take remedial action to realize that cigarette is not going to be their sustaining revenue in the long term. So
Wonderful. So
this is
obsolescence is also a risk which one has to anticipate.
exactly. And they have to see how the clouds are developing, what which way the government thinking is progressing, and
Yeah,
what might be coming at them at the face, on in the face in the near future.
wonderful. Because
Absolutely.
Kodak, I think that WhatsApp thing was going the rounds. I think we asked our last time director also. Kodak. Kodak literally, once the camera
Why
started
why
coming in the mobile phones,
why Kodak, even Nokia?
Nokia. Correct.
Yes, I
True.
mean such great brands.
Absolutely.
So,
Uh,
I would like to ask one thing, Parijat.
Yes.
When we talk of risk management committee,
Yes.
and recently SEBI has amended regulations also with that respect,
Mhm.
making it little more, which can act. But I'm sure there are a lot of challenges also with that. Now, my question to you is that when an independent director is sitting on a board and is a part of a risk management committee, the way or how do you see the involvement of the management while dealing with that in risk management committee, and how the role of an independent director should be, because what happens is the ultimately risk assessment is to be done by the team, the management, and there is always a conflict or a gap between independent director and the management. I mean, independent directors don't get involved into the management directly. So how the that combination should work out, because the risk management committee will have independent directors on board clubbed with management, but management may not be disclosing everything to the committee. So how that balance can be brought out?
Well, I would say that the management very often chooses to disclose what they want to disclose.
Exactly.
So it is up to the board and the members of the board to elicit and extract information from them. When they're discussing their business plans, for example, do they have only a short-term vision, or are they looking into the future? Are they looking into the emerging threats from competitors or from environment, what we call ESG?
correct.
So all that it has to be asked by the board members. Only when you ask, you will get. And just to give you an example of the COVID times,
Hmm.
now failure of risk management is being observed in many manufacturing units and factories and all that, which have been lying idle for so many months. And since during these months there has been no maintenance work done, when you do a startup, when you do a restart, many of these factories have failed. Many of these plants have failed. There have been breakdowns, and there have been accidents and even explosions, which
Correct.
means no maintenance at all. So they have not paid any attention to risk management. Similarly, aircraft sitting grounded on the tarmac for many months need to be continuously maintained and overhauled for them to be able to fly safely again. So
Yeah.
this is COVID times. That apart, even in normal circumstances, the board should really be told from time to time that what are the risk management initiatives that are being taken and where lies the emerging threats. Because the emerging threats is something which is very important, and one must be prepared for it. Cyber attacks, for example, is a case in point.
Correct.
True, absolutely. Over to you, Bharati, for the
Yeah.
question.
As a thing of mitigation, how do companies in general and independent directors in particular protect themselves in the current environment? Also, and because of the increasing board accountability, which you touched upon early on. So,
Yes.
what are your suggestions on this?
Right. So now here, independent directors or those aspiring to be independent directors, first and foremost, when there is an offer to join a particular company's board, they must ensure that the company has a directors and officers liability policy in place, because
Okay.
many do not know that there is something called such a policy which can protect them in the event they face litigation, or in the event their personal assets are at stake. Many do not know that the existence of such a policy and what it covers.
Correct.
So this is something that should be that should come as a great assurance. And in fact, frankly speaking, after the revision of the Companies Act, the number of DNO, directors and officers policies, has risen considerably in India,
Correct.
and not enough anyway, because as of now, it is not mandatory for all companies to have a DNO policy. I think.
Correct.
I th-
Actually, the Uday Kotak report of 2018 was, mandated by MCA, and thereafter SEBI for the listed companies insisted that for the top 500 listed companies,
right,
there must be a D&O policy which has been vetted by their risk management committee
right.
and then purchased. But it
Yes,
talks about the first 500 companies, listed
yes,
companies.
yes.
But like you said, it is mandatory for all companies
Should
to
be.
be protected.
Yes.
I just want to take you further on this. Can a person who's a director on the board and he finds that the company does not have a D&O policy, can he purchase one for himself, like you would buy a health policy or a motor car insurance policy? Can you buy a D&O policy for yourself? Is it
No,
feasible?
I don't think the regulator allows it. It has to be a corporate purchase only, and
Yes,
individuals are not permitted as of now to buy separate insurance. I don't think it exists anywhere in the world either.
good. So this is a common misconception which I just thought should clarify. Isn't it compulsory the liability for all policies? Can an individual buy this policy? You already answered that. Now we'll talk about what are the limits which are being purchased. How do you find? How does a director who's been invited as an independent director find out what is enough? How can the ID also ask the company to enhance such limits? What are the annual reports, or what do they see of the past transgressions in order to find out that penalties which have been attracted earlier, have they been adequately protected in the current D&O policy? Now, if there are any pending actions like contingent liabilities, compounding actions, does the independent director who is now invited on the board take any protection on these accounts?
Um, as I said, that um, the before joining a board, he should clarify and be sure and assure himself that the company has purchased a DNO policy. So now, shall I talk about the policy in what form it comes?
Yeah, just quickly. So
Right.
side A, side B, what is the
Correct.
coverage?
So you already know about that. So there are, for the benefit of our viewers, it comes in three sections: the side A, side B, and side C. Side A covers the individual liability of a director. For example, if a director is sued by name, then the side A policy will trigger. The side B, when the company pays on its own to protect its directors. And side C takes into consideration claims arising out of securities action. Right now, the difference between side A, side B, and side C is that side C is not very common in the world and very uncommon in India, because
Yeah.
securities action suits can get very complicated. And in any case, whatever side C policies are available, they come with a big deductible. Similarly,
They come
side
with
B,
a big, they come with
deductible,
a big
deductible,
deductible.
yeah,
So
which
would you like to explain for the benefit of this thing, what is a deductible?
a deductible is something which the buyer of insurance has to pay on. It's like a co-pay, which the buyer has to pay on his own before any claim can be settled. Just to give a simple example, if the claim is of 100 and there is a deductible of 20, the first 20 of the claim has to be borne by the buyer by the insured, and the balance will be paid by the insurance company.
So it's your own skin in the game.
Exactly. It's like a co-share.
Yeah.
Similarly, side B also comes with a deductible. Now, side B, as I said, it pays for protection of its directors if there's a claim against the company. Maybe it might be naming the directors also, where the side B protects the directors and pays for the defense costs, as well as the ultimate compensation, as well as the ultimate awards that come from the court. Now, what happens is side B and side C together, if there is a big claim, might exhaust the entire cover of the entire DNO policy. Now then, side A, which is the first part of the cover, which protects the individual directors, there is nothing left for that. So a side A policy is a very critical policy, very crucial, and independent directors must bear that in mind, that the side A cover of the DNO policy has independent limits. apart from the overall limit of say 100 crores, which covers all the three, side A, side B, side C, but of that 100 crores, side A, which is called an excess side A policy or a DIC, difference in condition, a side A policy should have an independent limit of its own, which means that it is to be used only for the protection of directors who have been individually named. Now, why is a side A necessary? It is necessary when the company faces insolvency or bankruptcy and to protect its individual directors. So when you have a separate limit earmarked, then that can be used for the individual directors who have been named.
Yeah.
And just to talk a little bit more about that, in cases where there is an insolvency or their company is left without any funds, then what happens is the insolvency administrator, the bankruptcy administrator, he pounces on the DNO policy of the company because that is the only source of revenue for him.
Correct.
So when he takes that money away from the policy, there's nothing left to protect the individual directors. Yeah.
Okay.
So these are the three sections in which the DNO policy comes.
Agree.
So once again, to clarify, that a person who is joining a board must ensure A, that there is a DNO policy in place, and must ensure B, that he as a director is adequately protected under side A.
Correct. And the securities is also now assuming more and more importance as a number of companies are coming for the IPO.
Yes.
And the PITs, that is the prohibition of insider trading, and LODR regulations are becoming more and more strict and more tight. So the side C is also going to become essential.
Yep, it
the
is essential.
Yeah. Regulation side. How, when you're getting invited onto a board, do you demand to see the D&O policy?
Oh, you don't demand, you request. It's not a secret or anything of the kind.
And if it's not adequate, what do you do?
No, you as a prospective independent director will not know whether it's adequate or not.
Correct.
Yeah,
I was about to ask that.
Yeah, because you're entering into an unknown territory. You do not know much about the company and its revenues, or for that matter, whether it has faced any litigation in the past and its past claims history and stuff like that. You will not know. But a standard 150 crores in India is good enough.
All right.
Yeah.
As a thumb rule. Very good.
As a thumb rule. For a non-listed company, if you're a listed company, well, the amount goes up. And right now, for the benefit of the viewers, the rates of premium are pretty low. Because in India, coming back to the fact that it's a non-litigant country and it's not really woken up to the possibilities of litigation, in India, the claims are pretty low. So hence, the premium is also low for DNO policy, and in fact, it is going to get revised now because, as I said, the influences from overseas and all are going to affect the Indian market.
Yes. So again, being the reinsurance expert that you are, how important is this for adequacy of reinsurance? Because most people are not even aware of what is the term reinsurance. And the fact that insurance companies who are selling such long tail policies like directors and officers liability, professional indemnity, errors and omission liability policies, these type of even product recall liability insurance, these type of insurances have got very long tails, they've got very fat tails. Just explain in a very simple layman term what it is and how the insurance companies seek to reinsure this outside.
Yeah, first and foremost, the DNO policy comes with certain exclusions. Everything is not covered under that. For example, physical injury, bodily injury, etc., bribes, and personal injury, also defamation, etc., are not covered under that policy. These are covered under other policies like professional indemnity, like comprehensive commercial general liability policies. Just to give a little anecdote, the board was discussing about a part of the office where there's a carpet and it has developed holes and all that, and it is becoming a risk for visitors who enter the office. Somebody might trip and fall. So it was discussed in the board, and one particular member put his foot down and said that, well, not right now. It's an extensive length of carpet we're looking at, and we'll do it in the next financial year. Now, before the next financial year came, a visitor tripped on that carpet, fell down and broke her hip. So first of all, she has to be indemnified for bodily injury. So bodily injury is covered under what is called a commercial general liability of that particular company. That's fine, taken care of. Then she wants to now sue the board that why did you not look at this particular possibility, and there's the deficiency of service or there's a negligence on your part. So she employs a lawyer, and the lawyer looks into the minutes of the last board meeting, and he discovers that yes, it was discussed, and Mr. A put his foot down. So Mr. A was sued for negligence. So he will be protected under the DNO policy. So one incident has triggered two policies. So this is how insurance works, and this is how litigation works.
Yeah.
Your second question was about reinsurance?
Yes.
Right. Now, again, reinsurance is a subject which it requires skills which cannot be developed overnight, and neither can it be sort of understood by just studying books. You have to be, you have to have
Hands-on experience.
hands-on experience. So the experience of the board as far as reinsurance arrangements is concerned is practically zero. So even in insurance companies, I have seen that external members who are sitting on the board, they just let it go. I mean, when the reinsurance part comes, they listen to what is being presented. They actually have no questions to ask because and you can't really blame them for it because it is a subject which is quite alien. So in my opinion, when board directors are sent for training, there are training for the board directors. Reinsurance should also be a subject which should be included. And I remember when I was at GIC Re, we organized a 2-day seminar, 2-day training session for our entire board on only reinsurance, just to understand the nuts and bolts. So that is required to be understood. Why is reinsurance important? Because now, when you're talking about, say, the company that you're protecting, the company that is buying insurance. Now, the company that is buying insurance is protecting itself by buying reinsurance. Now, we understand that the contract between the company and the insurance company and the insurance company and the reinsurers are two different mutually exclusive contracts. That is what we understand. And that is the truth. However, we cannot rest on our laurels here and say that, okay, if my insurance company has agreed to pay, why do I worry about what reinsurance arrangements he has made? You need to worry because if the claim is huge, it will not be possible for the insurance company to pay from its own balance sheet. There will have to be reinsurance recovery. So it is important for the board to understand what kind of reinsurance arrangements have been put in place, whether what has been protected by reinsurance treaties are a mirror image of what has been sold to the what has been bought from the insurance company.
Very correct.
The two should match. Tomorrow, one of the most common causes of dispute is that the insurance company wants to play the game, but the reinsurer says, I protected you with my reinsurance treaty. You have violated clause ABC. And I said protection for, say, 100 yards. You have gone and given protection for 500 yards. So how am I liable? So these kind of disputes are to be avoided. They have to be avoided at all costs. For that, you need to understand. So the board, even if they don't understand the concept of reinsurance, they can very well ask the company chairman that what arrangements have you made? Now, for example, there is something called exposures, management of exposures. How have you managed that if all your plants are located by the seaside or the riverside, or if all your units are located in the earthquake zone? Are you well protected? Because one earthquake can devastate 20 of your units all clustered together.
Yes.
Have you bought adequate reinsurance? First question. Second question, what kind of arrangements have you had over the past? What kind of recoveries have you had from the reinsurers?
Correct.
Have you only been paying reinsurance premium, or have you been able to recover some money from them or not?
Very good.
These are questions that need to be asked by the board. Yeah, and for this, you don't require skill. This, you just need to understand whether the company is doing its job well as far as buying reinsurance protection is concerned.
Yeah, very true.
It's very, now mind you, even the regulator today, when it approves the reinsurance arrangements of an insurance company, it asks them that what kind of recoveries have you had from your reinsurers in the past? What kind of payments have you made? So similarly, the board can also ask company, a non-insurance company, no doubt, that what arrangements have you made for your protection? I know you have bought insurance, but then there is no guarantee that if there is a devastating loss, if there's a catastrophe loss, that your insurance company will be strong enough to pay it in full. Tomorrow they might just become insolvent.
Because something was there in the papers about 2 weeks back where the insurance company, in full good faith, purchased via a reinsurance broker protection, and there is almost about 400 crores of fraud because the reinsurance broker had pocketed the premium and not purchased reinsurance cover.
Well, these are aberrations, Bharti. These are aberrations, and this is fraud. It happens in every industry. So that is a different subject altogether. We're not getting into that.
But awareness is what I'm saying.
Yeah, exactly.
You must be
Exactly. The
aware
board
that
can
you are
very well ask.
adequately protected.
The board can very well ask that apart from your reinsurers on board who are protecting your insurance company, who are the brokers that are facilitating all this? How much, what is their knowledge? What is their standing? Do they have international connections, or are they a standalone broker in India? If they are a standalone broker in India, what are their credentials?
Correct.
These are questions the board needs to ask, and otherwise the reinsurance arrangements, they get bypassed, and it's only when there is a catastrophe loss that the company suddenly realizes that my insurance company only pays this much and not in full because of this, that, and the others, and you get into dispute. That is to be avoided.
That is to be totally avoided. So when we are talking about claims, what about personal guarantees which are given by a director or the CEO? For example, for a loan which has been availed by the company from a bank, and the director gives the personal guarantee. So and the company subsequently fails to repay the loan. So always the thought was that, unlike a partnership firm, a company has got limited liability. Nobody can go against the director. So just talk about this for a little while.
I think this is a challenge for most of the Indian SMEs and MSMEs, which I have been observing, because banks don't give loans unless there is a personal guarantee by the directors. So I would also be very keen to listen to your feedback on this.
Well, if the loan is subject to a personal guarantee by a director or the CEO, he is actually doing it at his own risk, just to fulfill the conditions of the loan, without realizing that yes, the company might be in a position to reimburse him, but the company on its own will not be able to claim anything from the insurance company, because a personal guarantee is not covered under the DNO policy. It is not covered because, you see, if you look at it logically, you are giving a guarantee against yourself for yourself as a director. So a personal guarantee, you have done it in your personal capacity, that is not included in that cannot be covered under the DNO policy.
Okay, and suppose you are a director on 3 or 4 boards. One of the companies has gone bankrupt or failed to repay the loans, failed to repay the interest on loans, or not submitted the annual accounts for 1 or 2 years in succession. And because of the fact that you are an independent director on that particular board, your liabilities or some transactions get triggered on other boards. So does DNO policy, help for the penalty which has to be paid by the director, the loss of reputation? He's not being invited, or he may have to step down from the other boards. Any of these eventualities are covered?
No, because each board is independent that way, and each policy is exclusive to that particular board only. So, and the loss of reputation as such is not covered under the DNO policy. So there would not be any reimbursement there.
There's no reimbursement on that. So virtually the director is without cover.
Yes.
So what about minority shareholders? Can they bring action against a company? Who are the usual plaintiffs in such cases?
Well, plaintiffs today, anybody and everybody for that matter. It could be an employee, it could be an ex-employee, it could be a fellow director, it could be a shareholder, it could be the regulator, it could be a competitor. Yeah, practically everybody can sue.
Everyone can
Yeah,
sue.
yeah, yeah.
Correct. Uh, we'll just talk about the business interruption policies. Here,
Yeah.
it is talked about as a consequential loss policy. A
Mm,
lot of businesses are suffering because of COVID.
yes.
For 8, 9 months, they've lost their supply chain, the markets, and business has come to a grinding halt. Uh, One would envisage that if I have a consequential loss policy or a business interruption policy, I should be covered. I should be making a claim on the insurance company. Your views, please.
Well, Bharti, you have touched on a subject which right now is being debated hotly all over the world. And Supreme Courts in the US are sitting, burning the midnight oil, really, trying to resolve this because many high courts in the US have already started ruling in favor of insureds who have been affected by COVID related business interruption. Now, when you look at the concept of business interruption, it is always connected to property damage. There has to be a property damage for the business to have come to a halt and for the business interruption policy to trigger. This is the basic concept of a business interruption policy. Now, here what we are looking at is non-damage claims, which means that there is no property damage. Then, and yet the business has come to a halt, people have suffered tremendous losses and crippling losses. The courts are ruling in favor of such customers and who have lost, and they are ruling against the insurance companies and compelling them to pay. Insurance companies are now referring the matter and appealing to the Supreme Court. Just to give you an idea, how now here I want to touch upon something which is very significant and very important and crucial, and that is contract clarity.
Correct.
Yeah, so whether it's an insurance contract or a reinsurance contract, there should be absolute clarity and
Yes.
there should be no scope at all for lawyers to interpret it to their convenience. Just to give an example, how this thing is getting interpreted now. This COVID claims, now normally for property damage, the insurance policy always comes with an exclusion of pandemics, epidemics, infectious diseases. So
Correct.
any loss happening because of that, it comes with an exclusion. Now, insurers are realizing to their dismay that many of their policies do not contain that exclusion. They
Oh,
have not included that as an exclusion. So
okay.
without that, today their standing in the court is very weak. Okay, leave that aside. There are companies who have included that as an exclusion. Even
Okay.
their standing has become weak because the courts are ruling in favor of the insureds.
Insurance.
Their justification is that the lawyers are arguing that we are here talking about a virus which is a particle which is moving through the air and it is impacting the units which have got affected by the virus. So it can be taken as a property damage itself because the virus has hit a particular plant or a factory because of
Ah,
which the factory has not been able to operate and shut down. That is the claim, that is the stand that the
lawyers are taking.
plaintiffs lawyers are assuming. Now the defendants lawyers, they are also smart guys. They are assuming that they are now saying that, look, you are violating the basic principle of insurance.
Yes.
Insurance says collect from many to pay for the claims of a few.
You.
Now, here we're collecting from many and paying to many also because it's a widespread thing and affected 100%. So these are various things that are going on, and this is definitely going to be a game changer now.
Game changer. Absolutely. I totally agree. So in this context itself, the other thing which I wanted to ask you is like number of companies have been requesting their employees to come back to work, especially manufacturing companies.
Yes.
So because of this, they are exposed, to
Mm,
pandemic. And
mm,
what happens, like employee health and safety is a concern.
mm,
Definitely, it's a concern, but I don't have adequate cover for employees' health and safety.
mm.
And now I have claims on account of that. So what do I do? As a business, what do I do? As an individual director, how do I advise my board?
Well, there are two things here. One is a health insurance policy, and the other is the HR and the HR aspect of directors and officers policy has an employers employment practices liability policy.
Correct.
So
EPLI.
that is, of course, practices that are followed by the company in the workplace. That includes sexual harassment and stuff. But here, the companies will have to ensure that their employees are adequately protected by a group health insurance policy, which includes COVID. There's no dispute there.
Correct. Divya, you wanted to ask something? Liability.
I'm enjoying the conversation a lot, and that's, a totally unknown space for me as a director. So, I'm trying to imbibe so many things from the conversation and, taking my notes.
Yeah, so as a
Yeah.
director, independent
Absolutely. I
director,
mean,
do ask some questions.
No,
You know,
because
take
the
it light.
time is short. I'm
yes,
speaking a
yes,
little fast, actually.
yes. We are almost at 7 o'clock, just 5 minutes left.
Can you just
So,
give a thumb rule of what will be? You said 150 crores.
Yeah.
So what will be the, a thumb rule about the premium rates?
See, 150 crores policy, 150 crores cover for a non-listed company. The premium rate would be anything between 10 paisa to 20, 30 paisa per 100.
Per cent.
Per 100%, yeah.
Per 100.
Yeah.
Okay. Out of academic interest, how does the company deal with suits which are arising out of claims or what is not covered in the D&O policy? Okay, like for example, bodily injury, you already said, personal accident, you said employee health and safety. What about workmen's compensation claims, employers' liability claims?
Yeah,
Those type of things will be covered in the D&O policy?
See, when a company, for example, goes in for an IPO, then, the prospective investors should see whether the company already has these other insurance policies in place, like workmen's compensation, commercial general liability, professional indemnity, etc., so that they will take care of most of the incidents that happen during the course of the policy. If those policies are absent, then everything comes on the directors for negligence. It's as simple as that.
Negligence.
They can always be sued, saying that you did not take adequate precautions in your workplace. You did not have, the carpet was full of holes. The directors are responsible. It can always come to the directors for their negligence in providing a safe workplace.
Right. So also you said if like for example, you are having a payment gateway and some person who used your payment gateway was defrauded, okay, while purchasing an insurance policy or while purchasing a product through your payment gateway. So that type of fraud would also attract any, suits under the cyber security policy or your D&O policy.
That is a cyber crime.
That is a cyber crime.
Yeah, and companies ideally should have a cyber crime policy also in place.
Correct. What about data privacy and data theft? And because now the data bill is going to come, I think, in the next parliament session. So, you have not taken adequate precautions because all companies generally save the email IDs, the phone numbers, the addresses of all the persons who are having a footfall. And we are not getting the express consent. We do have a cookies policy, but generally you don't get express consent. Yeah. So if you don't have a data privacy or a cyber information security policy, now after the data privacy bill comes, what will be the incidents? Because there were a lot of things on Aadhaar. If you recall, there were so many discussions and this thing on Aadhaar and data theft because of Aadhaar, this thing, UIDAI losing information, personal information. So,
well, that data privacy, data protection, and if there is data theft and data misuse, these are all covered under the cyber liability policy of the data that are available.
Correct.
And in fact, they also, spin around and hit the D&O policy. If you take an example of the Marriott case, that is quite recent actually. There's a cyber liability that has got triggered there, and it's a $12.5 billion.
$12 billion.
$12.5 billion. That's how it happens in the US. So, and it has been called as cyber infestation.
Okay, can you just quickly, briefly describe it in one or two sentences?
Okay, you can go to your next question. I have it here somewhere. I'll just locate it.
Okay, so what are the different policies? Like, there's no end to the number of insurance policies. So what would you, off the top of your head, ask an independent director to look into when he does thing? One is, of course, the D&O policy.
Yes.
Other than that, the products liability, professional indemnity, cyber security, cyber crime, general comprehensive general liability. So
They
these
all,
are
they
all
all,
forming part of the risk
they
management
all
program.
are very essential policies because, as I said, a visitor in your office who trips and falls on a carpet, uh, uh, she suffers she suffers bodily injury. The bodily injury is not covered under a DNO policy. So then, what happens here? So the DNO policy will not pay, but she still sues the company. Then you pay from your own resources. If one particular director has been identified, or the company has to pay from its own resources. So the company has to have in place in such situations, mitigate such situations, what is called a comprehensive commercial general liability policy, which takes into account bodily injury. So for any company to be functioning well, they have to ring fence themselves with all the options that are available. There are fantastic options available now. And these are not very highly priced, but yet they'll give you a good night's sleep because you don't know from where it's going to come.
Correct. So it's part of risk management to be able to
Definitely,
look
yes.
around the corner and see
Yes,
what is the dark cloud.
exactly. So this is something which a board member definitely needs to ask the company, that how well protected are we? What are the policies that we have purchased? Tomorrow, you should not tell me that, oh, this is a claim and this is a suit and we have no insurance protection. So the directors have been, sort of hauled up for that.
Yeah. So under part of the director's responsibility statement, which is there in under the Companies Act,
Hmm.
they are supposed to ensure that there's a proper risk management system, proper things in place. So what happens, like for example, if there's a claim under the labor laws,
Hmm.
like non-payment of the ESIC or PF dues in time, and then the independent director gets slammed with penalty, which is not in his scheme of things. This is not part of the core company's, transmissions. Like suppose, for example, it is an NBFC. So their regulator is RBI. Okay. So instead, actually, they're getting hit from somewhere else. They're getting hit from the labor laws, the thing like
So
PFRDA.
I would categorize it as non-compliance of regulations. I mean, whether they have to pay something as per mandate to certain entities as per regulatory requirements, non-compliance of regulations is also covered.
Oh,
Okay, non-compliance of
Yeah,
regulation is
yeah.
covered.
And
So
the regulator,
penalties,
regulator
fines
himself,
and penalties are covered.
fines and penalties for civil offenses
oh,
are covered. So the regulator himself can sue the company.
Okay.
Fines and penalties for criminal offenses are not covered.
So
But
that lets out POSH, prevention of sexual harassment.
yes,
So if there is a claim under that, like every third day when you read the paper, somebody is getting sued under POSH laws.
hmm,
Okay, and for crimes, alleged crimes or crimes which have happened about 5 years back, 10 years back,
mm,
you know. Would that be triggering the D&O policy and the
very much,
compensation?
very much.
Very much.
Yes, yes. So
All
this is
right.
all part of sexual harassment in the
Yeah.
workplace, and that is very much covered. Do you want to talk about
Marriott, yeah, just
Marriott? Yes,
as you touched upon it,
yes,
yeah.
and 12.5 billion is a huge amount.
Huge amount,
yes.
absolutely.
Right. Now, the Marriott had been impacted in two incidents, one in 2018 and another in 2020.
Okay.
So all cyber breaches. So now there's a 12.5 billion lawsuit, and it has been called a digital infestation of the company. It went unnoticed by management and caused about 500 million customers
Oh,
their data. Now this data was being compromised for the past 4 years.
Oh,
So a serious risk management breach here.
okay. My goodness. My goodness.
Yeah. So the worldwide, you'll very often find that the defense cost itself finishes the insurance cover that you have purchased. And this has been seen in India also,
Hmm.
where the cover has not been, it has not been visualized properly, the cover limit, and what has been spent on defending has exhausted the entire cover limit. So whenever the award comes, and the judgment comes, the company will have to pay from its own resources. There's no more insurance left.
My goodness. Really, it's been very
This is an
illuminating.
eye opener. This is
Eye opener of a session.
absolutely
I
People
can
need to
see
know.
Divya, making
Yeah,
notes, making notes.
people need to know.
Eye opener. I
Yes,
think we should have another session just
we
for
must have a session specially on the insurance and the directors.
yes.
Very well said. I think we are almost at 7. So Bharti, last one or two questions. I have one question for you,
Yeah, please do.
Parijat.
Yes.
So I mean, as you know, we have been training, mentoring directors and making them board ready. That's the ultimately what we are working on. And in this process, we have built in a platform for directors, which is a complete virtual platform. Now, what I would like to ask you is what you think, as far as the directors of the SMEs, MSMEs, and the private companies, must focus on while insuring, or unka basic insurance, how do they really, insure themselves at the company level. So D&O insurance is definitely one part, but apart from that, at a personal level, do they need to insure them separately under the, I mean, any other insurance, or only the D&O insurance at the corporate level is sufficient? Uh,
Well, you see, the liability of a director who's serving in a board will always come on him whenever it comes on him, uh, by virtue of his delivering or performing his duties as a director.
as a director.
Yeah. So there is no necessity for him to buy anything separately, because
Okay.
anything else will not be covered. Like, if he has a heart problem or something like that, he needs to have a separate health insurance policy. So by virtue of his role as a director, he is covered under the DNO policy of the company for any acts of negligence, fiduciary, etc., whatever that can be slapped on him by outsiders. Regarding his performance of his role as a director. So he has to depend on the company's policy only.
Wonderful. And one more question just connected to that. A lot of people do their businesses in LLP, in proprietors, partnership. They are not directors. So do they still fall under the D&O insurance, or they can take benefit of this for their businesses, or it's only a corporate kind of a policy?
It's a corporate policy only.
It's a corporate
Yeah,
policy
yeah,
only. So the
yeah.
proprietors, the partnerships, they don't get benefit
Well,
of
I mean,
D&O.
even if you're looking at a single person company or a private company or a public company, I think everybody needs to get sort of, what is that called, registered, and they need to have a board of directors, if my understanding is correct.
Yes, but there are a lot of businesses, they also run in a proprietor model,
Uh-huh.
wherein it's not a corporate entity, it's a it's a partnership firm of
Yeah.
two people. It can be registered, unregistered. One person company, private limited, public limited are corporate entities. But apart from that,
It's
the
for companies which are incorporated.
yes, so
Only for companies which are incorporated
perfect,
can buy
perfect.
this policy. Yeah.
Perfect, perfect. Point well taken. And I think last question, as a founder of Mentor My Board, I would like to ask you, when you heard about Mentor My Board from Bharti, so what was your views on that? And I mean, I usually ask everyone, do you feel Mentor My Board needs to be exist? So, what's the if I ask you,
USP. What is
yeah,
the USP of Mentor My
what is
Board?
the USP?
What
What
is
should be the
the
USP, or what you see Mentor My Board doing?
Well, I can definitely say for certain in my short association with you, MMB, that I see a lot of energy flowing from you guys. And there's a lot of enthusiasm. And I've watched a few of your programs. I mean, I got associated only about a month back. So
Yes.
I've watched a few of your programs. There's a lot of energy, and you are asking people of eminence to speak. And in the process, you are not only spreading knowledge, you are also getting together professionals from different walks of life, from different geographies, to share their views. And these are individuals with different competencies in different fields, and who probably were sitting in oblivion. Their skills have not been really tapped by anybody else. So you are reaching out like that, and tapping these kind of individuals, and that is a great job, I feel, because
Thank you.
not many people will come out of their own and say, hey, I'm a great guy, talk to me. Nobody's going to.
Correct.
So you are reaching out to such individuals and getting them together, and that is a good thing. I'm very much, I would like to compliment
Thank you very much. I mean, I would really, thank you for being here with us on this platform. I mean, 1 hour was just too short to have, such a wonderful interaction and discussions with you. But we'll look forward for more interactions with you, whenever you have next time, based on your availability. We would love to have more and more interactions on this very, very critical aspect, and also your journey as the person who has been now. I mean, when I heard your profile, it's such a wonderful profile with vast experience which you have in insurance industry. And I'm sure with your mentoring, your guidance, lot of directors, aspiring directors, independent directors, women directors on our platform also will be getting a lot of knowledge, and the practicalities of handling that role, basically, which is more important, because knowledge is there everywhere, but how that knowledge is going to be useful to me is very important. And I think with your interactions, with your mentoring, we would be able to help a lot of people on that. So I invite you to be one of our esteemed mentor on the platform, to share your immense knowledge with all of us. So
Yeah.
further details, I'll surely get in touch with you. And thank you again for being here with us on this boardroom talk on this Friday, on the Christmas evening, and sparing your valuable time with all of us. So,
No,
Thank
thank
and
you
you.
most
very much,
importantly,
Parijat.
thank
It's
you,
been,
Bharti, for such a great interactions. I mean, I was literally zapped, the way you had
He was,
interacted.
too illuminating. I know Parijat, but even for me, it's been a really wonderful, very interesting and illuminating talk. Thank you so
Absolutely.
much, Parijat.
Thank you,
thank
and
you,
thank
thank
you,
you.
viewers, for being here with us and watching it. Do like, subscribe our Facebook page, YouTube page, and most importantly, follow us on LinkedIn and join the circle of community. Don't forget to click the bell icon and subscribe the channel so that you keep getting information. And Happy New Year to all of you. See you in 2021. Thank you, everyone, and look forward to meet you all with wonderful, eminent personality in the coming year. And bye bye.
Thank you very much. Thank you,
Thank you,
Divya.
sir.
Thank you, Bharti.
Thank you, sir. And I have stopped this the Facebook live.